Hello, everyone, and welcome to the Copper panel hosted by Six. Before we introduce our wonderful panelists today, I want to remind you that you can submit your questions at any time on the Q&A panel on the right-hand side of the screen. And as always, this panel is being recorded and will be available to watch afterwards on Six.com. So to kick things off, I'll hand it over to our moderator, Knox Henderson, Investor Relations of Kodiak Copper, to get the panel started.
Thank you, Dasha, and good morning, everybody in the West Coast, and good afternoon on the East Coast, and good evening overseas, wherever you may be. So today we have a copper panel hosted by Six Social Media. It's a very exciting time for copper. Actually, in the news today, copper's hit over $4.10 a pound, which is almost a 9-year high because Chile had to close its border, the #1 exporter of copper. So copper very much in the news, and we've got an excellent panel today with some seasoned veterans. The good thing is we have representation in the Yukon, in Alaska, and in British Columbia. So these are three very prolific mining districts in the northwest corner of our continent. And we have projects at different stages. We've got early exploration, and we've got it all the way to feasibility and moving into, the permitting process. So I'd like to introduce our panel. First off, we have Tony Giardini. Tony's the president of Trilogy Metals. Trilogy has their projects in the Ambler district of Alaska. Good morning, Tony. How are you?
Good morning. Great. Thank you.
Great. Also, we have Paul West-Sells, who's joining us for the second time, and due to popular demand. Thanks for coming back, Paul. Paul's project is a casino project in the Yukon, advancing a rather large-scale copper-gold porphyry. Morning, Paul.
Morning, Knox.
And finally, we have Claudia Tornquist, President and CEO of Kodiak Copper. Kodiak is advancing the MPD project in southern British Columbia. How are you, Claudia?
Very well. Good morning, Knox. Good morning, everybody.
And eventually joining us will be Stefan Ioannou. He's just going to be logging on shortly. Stefan's going to be giving us a macro view of copper supply and demand. But we'll just change the order around a bit here just to get things going. So we'll start with you, Tony. Maybe you could tell us a bit about your project and walk the folks through your project.
Knox, thank you very much, and thanks to Six for having us here. Look forward to giving you a bit of an update on Trilogy. So let me start by just forward-looking statements and just highlighting that we'll be making forward-looking statements. First slide really just gives you an overview of Trilogy. And Trilogy is focused, as Knox said, on the Ambler Mining District. The Ambler Mining District is located in the great state of Alaska. Trilogy owns a 50% interest in that district. And I'll talk a little bit about our partnerships in that district. And what we're talking about in the Ambler Mining District is high-grade copper, zinc, gold, and silver. And we have two advanced projects, one that has a feasibility study that was prepared by Trilogy in 2020, and then Bornite, which is an advanced exploration project. So what I'll do in 10 minutes is give you a quick overview of a company. Ticker symbol is TMQ. We trade on New York and Toronto. And for more information on Trilogy, I encourage you to go to our website, trilogymetals.com, where we'll have a copy of this presentation. So with that, let me get started. A little bit about the capitalization of a company. We're very well capitalized, sitting in with about $11 million of corporate cash. In addition, we have a joint venture, and as I said, we own 50% of the district. And the joint venture itself is called Ambler Metals. It has $140 million in cash. So when we look at the see-through value, taking our share of that 140 plus the cash on hand against the current market cap of actually more around 330 million right now, we're looking at an enterprise value of $250 million. We've got some major shareholders. Electrum, Polson, and Baupost have been with us from the beginning. South 32 is our partner in the Ambler Mining District, owns 11% of the company as well. And we have other significant shareholders that have been with us from the start. And as I said, we're in a very good position in terms of capitalization and financial position. I mentioned partnerships. There's three of them: South 32, NANA, and the state of Alaska. And I'll just quickly walk through those. South 32 is our partner in the district. In essence, what South 32 has done is invested $145 million to earn a 50% interest in the district. In addition, they have funded an exploration program of $30 million, and they own 11% of the stock. So all told, they've invested about $200 million to earn their 50% interest. And they're very much focused not just on Arctic, but bornite and the exploration potential in the district. And I'll speak to that as I go through the presentation. The second partnership is with NANA. NANA is a native corporation located in the northwest part of the state. NANA has a rich mining history. They represent the Northwest Arctic Borough, and that's where our projects are located. Having NANA support and having support of a Northwest Arctic Borough will be key to the success of developing the Arctic mine and the district as a whole. And we're very focused on working very closely with the communities, focusing on their subsistent hunting and fishing considerations as we look to the development of the infrastructure to open up a district. And I'll speak a little bit more about how NANA fits into the economics of a project later. In addition, we have a partnership with the state of Alaska through a development agency called ADA. ADA was involved in the development of the road and the port that allowed for the Red Dog mine to be built. By the way, NANA is a partner in the Red Dog mine with Teck, largest zinc mine in the world, located also in the northwest part of the state. So we're working with NANA on the same basis where we're looking to develop a road that will be a private industrial use road only. This next slide shows you that road. The road is a missing link to effectively opening up a district, and things are moving along quite well. A permit was granted last year, which was the last federal permit required, and we're starting on the detailed engineering this year, where ADA and Ambler Metals are each funding a total of $35 million each, $70 million to cover the detailed engineering that's going to be conducted over the next 3 or 4 years. We expect to have more news on access to private right-of-ways and the budget for the current year, which is going to be released shortly in terms of that detailed engineering. So things are moving forward quite well. And the way the road will ultimately be developed is that be private industrial use then there will be a toll road. It will be built and funded by ADA with the Ambler mining district basically being opened up, and companies like Ambler Metals and others that may develop mines in the future ultimately paying for that road through tolls. The remaining infrastructure is actually quite good. Dalton Highway, a 2-lane paved road that connects you to Fairbanks, where there's a railhead, and then in Anchorage there's a port that would allow shipment to many different markets in terms of concentrate. This is what the road is projected to look like in terms of going through the district. All of those red dots, squares, stars are potential targets in the district. Sun is privately owned, and Smucker is owned by Teck. Everything else in the district is part of the Ambler Mining District and owned jointly by South 32 and Trilogy Metals. I mentioned a feasibility study. This was produced last year, and what it shows is a 12-year mine life, and I'll speak to the ability to extend that mine life considerably. We used the same prices that we used in the price deck in the 2018 pre-feasibility study, and what we end up with is a $1.1 billion net after-tax NPV with a 27% IRR, 32-cent copper cost net of byproduct credits. If you look at this based on current spot prices, that NPV jumps to around $2.2 billion. The IRR goes to around 40%, and those cash costs become negative 24 cents. The number that I also like to focus on is the capital intensity ratio, and what that shows is the initial capital per ton of copper equivalent, and this is very low by any standards out there. We'd be producing 3 products: a copper concentrate, a zinc concentrate, precious metal con. This is very much a copper mine, but there are significant contributions from other metals. And if you look at this, the percentage of revenue right now, it's based on the base case scenario. If you look at it at actual spot prices, the gold and silver component would increase, zinc and lead would decrease, copper would be somewhat larger as well. So there's a number of opportunities that we have because of the other metals that are available through the concentrates that will be produced. When we look at the mine itself, we expect to start the permitting process this summer. That would hopefully put us in a position to make an investment decision towards the end of 23, early 24. We're looking at a permitting period of roughly 30 to 36 months. There's one federal permit required. It's 404 wetlands permit. The other major permits are state permits. We have no federal lands. We're primarily on state or borough or native land. And so the process will really be to kick off this permitting process later this summer, to put ourselves in a position to make an investment decision. While we're doing the permitting, we're also looking to advance the project itself through additional work in terms of the feasibility study that was done and additional technical work to advance the project. This is the district itself. It's over 172,000 hectares. You can see the Arctic and bornite deposits. So Arctic, I mentioned, it's 43.4 million tons, 4.2% copper. It's a great asset, as you can see from the feasibility study details. Bornite in and of itself is not a slouch either, 180 million tons, 1.5% copper equivalent when you put the inferred and indicated together. In addition, there's a number of satellite deposits that have historic resources. And coming up this year, we'll be spending $27 million in the field. We're going to be conducting 14,600 meters of drilling, 7,600 at Arctic, and then 7,000 at other targets. So we're really just beginning to scratch the surface of the exploration potential in the district. When you look at bornite, as I mentioned earlier, South 32 had spent $30 million in exploration. It was mostly focused on the bornite deposit. You can see that there's 60 million tons at roughly 3% copper equivalent. So what we also want to do is look at how bornite ties to the Arctic and other deposits in the district, and that's part of the additional work that we'll be doing there. And in addition to copper, bornite holds a sizable cobalt resource of 77 million pounds. In terms of how this deposit compares to other volcanic massive sulfides, you can see deposits, you can see Flim-Flon, you can see Noranda that have had very long mine lives in those districts, 75 to 85 years. Hokuruku is another district that similarly has had significant development and production occurring over a long time period. And we believe the same to be the case for Arctic and bornite and the other deposits in the district. And looking forward in terms of upcoming catalysts, it will obviously be focused on the optimization of a feasibility study. The study work that was done by Trilogy is now being optimized by Ambler and moving the project forward in terms of next step. We're going to have a summer drill program, 14,600 meters, and that's part of a $27 million that's going to be spent. We also expect to commence the permitting on the Arctic project later this summer, and then we should have some announcements out shortly with respect to the road and the money that will be spent on the detailed engineering for the road this year, and additional focus on right-of-ways. So those are the main focuses. We didn't have a drill campaign last year because of COVID, so we're really excited to get back out into the field, and we expect to be on the ground in May through to September, possibly October. And with that, Knox, I'll pass it back to you. Thank you.
Thank you, Tony. Great summary. Obviously, lots going on with 14,000 meters of drilling coming and all that permitting process. So that's a great introduction. Meanwhile, I think our analyst from Cormark, Stefan Ioannou, is now online. Are you there, Stefan?
I am. Can you hear me?
Yeah, sure. You might, if you can turn it up a bit, that would be good.
Okay, how's that?
That's good. Okay, well, actually, and I'll manipulate the slides for you. So we'll go to the your first slide here.
Okay, great. I apologize for the technical difficulties on my end, but I just wanted to sort of talk about a general macro overview of copper. Obviously, we got three great copper stories on the lineup today, and sort of just wanted to sort of set the backstage as to why care about copper in the first place. And obviously it's the base metal of base metals, and there's a compelling theme emerging as well that adds to that with the sort of whole electrification, green energy dynamic that we see a lot in the news. So maybe just on my second slide there, Knox, just to sort of set the stage. And one of the things that obviously there's always bulls and bears, and one of the bearish arguments when it comes to copper is that, well, supply demand is interesting, but from the supply side, there have been a lot of new sort of large-scale marquee mines that have either come into production or are about to come into production, over the last few years, and that is definitely true. And on this slide, you see on the left-hand side some of the namesake mines that are quite topical right now. And as they're integrated into the current sort of copper world as we know it, they definitely tend to keep sort of that supply-demand narrative in balance over the near term. I'd say sort of through 2023 into 2024. But if you look on the right-hand side of that slide, the bar chart there, what really catches my attention is that as you get into that 2024, 2025 timeframe, and these new sort of this current generation of new projects is integrated into the copper world as we know it, the next generation is actually quite far behind. And so you see an emerging supply deficit in that sort of medium to longer term outlook. And I think that's really where the sweet spot for copper is going forward, and very interesting when you start thinking about, marquee developers. If you go to the next slide there, Knox, one thing to keep in mind is the copper price itself. And, just to sort of set the stage, keep in mind that, not even talking developers, but just looking at current producers, if we see copper pricing drop below, call it $2.75 a pound, you get to a point where about 25% of the world's current production is no longer economic. And, big majors can tend to weather the storm for, months or quarters at a time. But, when we see prolonged periods of low copper pricing, even the majors start to run into problems like we saw, over a few years ago in, say, 2015, where I can remember every conference call, the only real question that was ever asked was, how long until you're bankrupt type of idea. And that's the producers. And if you go to the next stage, Knox, or next slide, Knox, slide number 4, when we look to beyond the current producers and even beyond that sort of current generation of new projects, look to the next generation beyond that. This is a list of some of the larger scale, copper projects that are out there. And it's a busy slide, but I think the only thing I really want to highlight here is that when you go through the numbers, a lot of them, if not all of them, need, copper pricing well north of $3 a pound just to incentivize development, generate, a meaningful IRR to actually get these projects off the ground. If you go to the next slide, Knox. So bottom line, something has to give, and I think it starts with the copper price itself. And again, this is a pretty cartoony supply-demand projection. This is total copper supply now too, so obviously bringing in things like recycled copper into the supply picture. But nevertheless, we can see demand far outweighing supply over the sort of medium to longer term. If you go to the next slide there, Knox, so slide 6. And one interesting new dynamic in the copper world and the base metals world period is this whole electrification and EV narrative. And obviously, when we start talking about green energy, the first thing that comes to mind is your Tesla and electric cars. It's something that's sort of something that's very granular that we can all grasp and have seen and probably have been in one. And when we're talking the batteries in these electric cars, I mean the predominant metals are things like lithium, nickel, and cobalt. But copper, don't underestimate copper as well, especially when it comes to the infrastructure that's going to be needed to support those batteries and electrical vehicle charging stations and everything else that goes with it. So, we have a current demand outlook where, sort of call it base load demand is increasing at anywhere from 2 to 4% per annum. And on top of that, over the next decade or two, we're going to see an incremental increase in additional demand coming from this sort of new sector, if you will. If you go to the next slide, Knox, slide 7, and again, when we're talking electrification, don't just think EVs. It's an easy trap to fall into, especially when it comes to copper. In the case of copper, it's just basically electrification, period. It's copper wires that we use to get the electricity and move it around with. So anything from solar panels to wind farms to the cars themselves to big, stationary battery storage, all that stuff is going to require a heck of a lot of copper going forward. If you go to the next one there, Knox, number 8. And so what is the bottom line in terms of what does this actually mean for copper going forward? And the thing to realize is right now the copper market is around 23 to 24 million tons a year of supply and demand. And when we look at the incremental new copper demand coming out of the whole electrification narrative, it's on the order of 2 to 4 million tons a year of additional copper that we're going to need to source. So it's around a 10 to 15% increase above sort of base load demand, if you will. And again, that's going to come on over the next 10 to 15 years. And again, when you think back to that first slide, I showed you the bar chart with just basics mine supply rolling over and call it 2024, 2025, and then layer on top of that this new incremental demand coming on in sort of the same time frame over the next decade or so. Again, something really has to give, and I think it's going to have to start with the copper price itself to incentivize new developments. And even then, again, that sort of next generation, that big long list I showed you, a lot of those projects, some of them are into sort of detailed engineering and permitting, but a lot of them are well shy of that, and you're probably realistically facing 7, 8 to 10 years of timeline before they actually ever see any copper coming out of the ground. And then maybe on the next slide, slide number 9, just want to touch base. thinking about sort of electrification, the green narrative, and just something we're seeing a transition in the market in terms of what makes a good project these days. And when I think about the sort of old trifecta, old sort of checklist of what you really wanted in a project, economics were important and are still very important. But I think in this new world that we're entering, we're seeing, at Cormark, when we talk to institutional clients, one thing we're seeing is a lot more emphasis on, projects that are favorably located. So in ESG favorable jurisdictions, projects that have optionality on a low carbon footprint or a green narrative, to sort of, again, support sort of ESG practices from an environmental point of view. And then strategic importance. So not just buying a copper stock for the sake of having exposure to a pound of copper, but having exposure to a greater underlying theme like EVs or electrification, for example. So I think, when you think about investment opportunities, key questions going forward are, A, is it in a favorable jurisdiction? B, is there an argument, or is the company doing anything to demonstrate sort of environmentally favorable production of the specific metal? And C, strategic importance, and namely big projects that can offer long-term supply certainty. One thing we're really seeing now is groups like Tesla, for example, or end users really start to move upstream towards the mine side of the equation, because it's pretty clear that they're quite scared that there's just simply not enough near to medium-term metal out there to meet their business plans in terms of building batteries and building cars and building electrification, if you will. And so to them, cost is almost secondary. It's just securing long-term supply certainty is job number one for them. And it's don't forget, it's the cars themselves or the batteries or electrification where they actually make their profit anyways, not the actual pound of copper per se. So, kind of the new world where location trumps grade and carbon footprint trumps cost, I think are some key takeaway themes. And then just finish off with one last slide number 10, just to sort of, emphasize that point. This is just a recent survey looking at sort of non-specialist institutional investors and what they're looking for when they look at, mining stocks. And again, you can see top of the list there is, exposure to sort of key macro themes, in this case, the battery narrative or electrification. And then number third on the list, which jumps out at me as well, is again, that importance on ESG favorable jurisdictions. It's becoming more and more a non-starter for projects that are in tough locations around the world to get any institutional interest these days. So even if you have the A team that's demonstrated, the ability to operate and have success in challenging parts of the world, a lot of the institutions these days are just saying no right off the bat to those. So one interesting thing about, the panel we have today with, Trilogy, Western Copper, and Kodiak, again, you kind of check all the check boxes I mentioned there with, again, favorable location, big scale projects that can, offer supply certainty over the longer term. And again, just carbon friendly footprints, whether it's access to grid power or other key factors that I'm sure the companies will touch on. So with that, I'll leave it there.
Great. Thank you very much for that insight, Stefan. We'll certainly revisit this as we go along here. Our next presenter is Paul Westsells, as the president CEO of Western Copper and Gold, with its casino project in the Yukon. Paul, are you all set to go here? There we go.
There we go. Yep, I'm here.
All right, I'll disappear and let you take it on.
All right, perfect. Well, thank you again, Knox, and thank you, Stefan, for a great introduction. So I'm going to talk to you today about Western Copper and Gold and our casino project up in the Yukon. I will be making forward-looking statements, so please review this before making any investment decision. So just to sort of get a couple things sort of out of the way in terms of the structure of the company. So first of all, we're listed on both the TSX and the NYC American. I always point people to the NYC American to really get a better idea of how much we trade. Most of our trading is on that. We're starting 2021 with around a little over $30 million in the bank. That's on the back of a pretty large financing that we completed in November of last year. Share price, this is back in March, around $1.80. We're down a little bit from that, not much. Gives us a market cap of around $250 million. Where are the shares? Really on the back of that financing, so we did a $28 million financing in November. That brought in Fidelity, Franklin, and Copernic on this list. So they're now very, significant shareholders. And then the founder of the company, Dale, who's our chairman, and Mike Fatton, who is one of the shareholders that, assembled his position at the beginning of 2020 and then came on the board mid-2020 are also key shareholders. To sort of summarize the project, so this significant copper gold project, this is one of the largest copper gold projects in Canada. We have a new increased resource I'm going to talk to you about. This is a very straightforward project, big open pit, standard flow sheet, very simple to execute. Located in the right place, Yukon is really an emerging mining district that's really sort of come into its own over the last couple of years, fairly straightforward permitting. And we as a company have continued to add value. We've added value with the drill bit, we've added value with the engineering program, and it's a really good time to invest right now. We're in the midst of a PEA, which will be out in a couple of months here, and then that will roll immediately into an updated feasibility study, which will be out near the end of the year. So just to sort of, in terms of some of the headline numbers, in terms of contained metal, this is a significant copper and gold project. And so starting with the gold, there's 21 million ounces of gold and then 11 billion pounds of copper. So significant for both the copper and the gold. Often get asked, is this a copper project or a gold project? It's pretty close to half and half, as you can see here, in terms of where the value is in the ground. The other thing I'll point out is molybdenum, or moly, is a significant part of the story at around 20%. So I don't spend a lot of time talking about moly, but it's a key part of the overall project as well. Stefan did a great job talking about the copper market. I'm not going to spend any more time other than to point out, when we talk about Casino, this is a large project, and Stefan was talking about 2 to 4 million deficits per year. 5 million tons. So that's 2 years by what Stefan was talking about is 65 mines the size of Casino based on our copper production. So back to his theme. No one's really sure where all this copper is going to come from, and all that should translate into a very positive impact on the copper price. And when you look at the copper space, and I'm missing some projects here for sure, but the key takeaway on this slide, and this is really TSX and TSX Venture listed copper projects that are controlled by junior mining companies. The big takeaway here is there's just not that many. And then, as by what Stefan was talking about, you sort of screen for jurisdiction and size and economics, and it gets to be a pretty small list. The other key market, of course, with our deposit is gold and big gold. And with 21 million ounces of gold, it puts us in the top 10 undeveloped gold projects that are controlled by a junior mining company. And again, you screen out jurisdictions you want to be in and projects that have good economics, and that list gets even smaller, and we're still on it. A few comps here, and just to sort of put people into the picture of really how to think about Casino. And I'm not going to spend a lot of time here, but really, if you look at copper equivalent, we're similar to the size of SolGold's Cascabel. And then when you look at gold, we have 21 million ounces of gold. They have 24 million ounces of gold. So just as a close comp, we're a similar size project to SolGold's Cascabel. They're a block cave in Ecuador. We're a big open pit in the Yukon. So, depending on your view of the world, that's a plus or a minus. But, just to sort of put you into an idea of the size and the scope of the Casino project. Drilling down to the new resource. So first of all, this is an oxidized copper porphyry. So the top of the deposit has been depleted in copper and enriched in gold. We mine that off it starts 2 years before the main milling operation starts. That goes on a gold heap leach. That's 220 million tons at 0.3 gram per ton gold equivalent. But the real value is below that in the supergene sulfide and the hypogene. And as per the new resource, that is 2.2 billion tons at 0.36 copper equivalent. And we'll talk a little bit more about that. But before I leave this, I just want to point out this breccia here in the center of the deposit. I'm going to come back to this. This is the core of the deposits. It's very key. It's very key to the economics of the project, because it runs quite a bit higher grade. So a little bit about grade. I think if you asked people familiar with the project, they say, "Oh, Casino, it's this big low grade thing," and it's certainly large. But part of the reason that the grade, the 2.2 billion tons, is at 0.36, is that it's just such a large deposit and everything is ore. If we actually carve out the first 1.3 billion tons, you get closer to around 0.5 copper equivalent. And the other thing I'll point out is that in Western Canada, and we're just north of British Columbia and the projects there, and Copper Mountain, Gibraltar, Highland Valley, these are all operating mines. And you look at something like Highland Valley, it's been operating continuously for over 50 years. They're running a little over 0.3, Copper Mountain, Gibraltar, a little under 0.3. Some newer projects here, Mount Milligan, Red Chris, sort of very similar to the 0.5% that we're talking about for our first billion tons. A little bit about flow sheets. I mean, we did a full feasibility study in 2013. That's what's in the permitting process right now. That's what the PEA will update, and the feasibility at the end of the year will update. But fairly straightforward. It's a large milling operation for the mill. You can see here, relatively medium to soft ore. Conventional circuit here, recoveries is what you'd expect for a project of this size. And then heap leach again, low grade heap leach recoveries are sort of consistent with that. Talk a bit about the district. I always like to stop real quickly on the slide. This is what it looks like up there. This is the top of the deposit. This is probably the first material that would be mined. Two takeaways here. Not that mountainous in this part of the Yukon, and actually semi-arid. So we actually bring in water here. So I always say this is a much more similar to Chile and up in the mountains than other jurisdictions. Just real quickly on the Yukon. The Yukon, I keep calling it an emerging mining district, but it's actually an established mining district now. There's 3 operating mines. The Belkino mine just started up I guess the end of last year. Of course, the Eagle Gold Mine has been very, very successful. So it's really turning into a pretty significant mining district. And, we've been up there for 14 years. So good relationship with the First Nations. We've actually won some environmental awards, support a whole bunch of initiatives up in the Yukon, which, I think modern mining companies and certainly all the companies on this call do very, very well. All of that work has really ended up in a great funding for our access road. And so the Prime Minister, shown there, Premier of the Yukon, this is 2017. They announced $130 million funding package for our access road. Flash forward now, because we all know governments are great at making announcements, but not necessarily great at following them up. There's agreements with the First Nations on the first part of the road. It's through environmental assessment, and they're going to be breaking ground this year. And then just real quickly on the district itself, if you look at the district, here's us here with Casino. Next to us is Newmont's Coffee Project, which just got through environmental assessment. White Gold with a bunch of exploration, Triumph just south of us. And this is a 50-kilometer scale bar. So to put you in the picture, the takeaway here is this is an emerging district. There's 30 million plus ounces of gold, 10 billion plus pounds of copper. This is an exciting district, and we're by far the largest player in the middle of it. So just real quickly, as I said, we've had this for 14 years, and moving forward, we've got a PEA and a feasibility this year, and then restarting permitting. We did some exploration last year, added to the north. So this is additional resource up here and over in this corner here. But really, the key thing which we really reiterated and further delineated is this core zone. This is that breccia I was referring to. If you sort of carve that out and look at that as the resource, I mean, that is 0.7 copper equivalent, 330 million tons. So, the way to think of this deposit, don't think of it as a big low-grade deposit. Think of it as a core at 0.7, 330 million tons. Then at 1 billion tons, you're around 0.5. At 2.2 billion tons, you're at 0.36. And then there's actually another 1.4 billion tons of inferred. So, very large copper gold project. And then lots of exploration potential. We acquired this project next to us last year. We just done a couple holes last year in that. So certainly lots of potential there. And then some deep potential. These are IP targets that look very, very promising as well. So just to summarize, this project that hits a bunch of the boxes, significant copper and gold. We've been making steady progress on it, and upcoming catalysts, PEA a couple months out, feasibility study at the end of the year, and then back into permitting. So thank you very much.
Well, thank you, Paul. That was a very good summary as always. You've already answered a lot of the questions that I had in my back pocket, but I'm sure we'll keep the dialogue going. So next up, we're going to go back to the other end of the scale, early exploration. Claudia Tornquist, President and CEO of Kodiak Copper, exploring the MPD project in southern British Columbia. Hello, Claudia. Over to you.
Thank you, Knox. So as Knox said, Kodiak is an exploration company exploring for copper and gold in North America. We recently made a discovery that was a real game changer for the company at our MPD project in southern BC. Our share price jumped from 50 cents to over $3, and it really was a transformative event for the company. And we are now busy drilling and have the largest biomargin drill program underway that was ever done on the MPD project. So very exciting times. Before I dive deeper, please keep in mind that I will be making forward-looking statements and read the relevant guidance on our website before making investment decisions. I'd like to start out with the Lassonde curve to illustrate what Kodiak is about, because really we are a very different proposition from Trilogy and Western Copper and Gold, the companies you just heard of. I'm sure many of you are familiar with the Lassonde curve. It shows when value is created in the life cycle of a mining project. And typically there are two stages where investors reap real rewards. That's starting from the right, the bump at the time of production, when a mine goes into production and cash is generated. And then earlier in the life cycle, another bump in the curve, that's at the exploration and discovery stage. And that stage Kodiak has just entered. I've drawn this yellow rectangle onto the curve. We made our maiden discovery last year. And as I said, we have a very large drill program underway, and we'll have many more results to come. And I'm confident we'll be able to move our shareholders up this curve and generate value at the drill bit. Before I dive deeper into our project, I'd like to say a couple of words about the people behind the company. First and foremost, our founder and chairman, Chris Taylor, who many of you, I'm sure, know from our sister company, Great Bear, one of the big discovery successes in North America or worldwide, really, in recent years. Chris, many people think of him as a gold guy because of Great Bear, but what's good to know is that his home turf as a geologist is actually in copper porphyries, i.e. exactly what we are doing with Kodiak. Chris started his career as a geologist with Imperial Metals, drilling copper porphyries all over North America. And Chris is leading our technical work, and his experience is invaluable for our company. My background is with Rio Tinto for many years, and my background is more on the financial commercial business side. I worked on some of the largest copper porphyry projects for Rio Tinto. I did some work, for example, on Escondida and also on Oyu Tolgoi. So some copper experience in my background as well. And last but not least, I should also mention John Robbins, who is an important part of our team, shareholder and a advisor to the company. And John put together the discovery group, of which we are part. You see here the members of the discovery group. It's a great group of companies, some really successful companies in there. And we are an informal alliance. We all work out of the same office, and it's just a fantastic network of support, whether it's for technical expertise, contacts, capital markets access and expertise. It's a real great network to be part of, and I'm very much convinced that Kodiak is a much stronger company as part of this group than we would be just out there on our own. And now, without much further ado, some more about our MPD project where we made our discovery last year. You see here the map where the project is located. We are in southern BC in a very established mining district between two large copper and gold mines. To our north is Teck's large Highland Valley mine, and to our south, Copper Mountain. So very established mining area, which is fantastic because all the infrastructure is right there, whether it's electricity, water, workforce, everything you need for an exploration project. And the project is very accessible. You literally turn off the highway onto a logging road, and a couple of minutes later, you're right at our drill pad. You can get there year round. And that, of course, is fantastic. It makes the hurdle that this project has to make to eventually become economic so much lower than it would be for a more remote project. So we're very, very happy where we are. That was location was one of the key points why we acquired the project when we did so a couple of years ago. What's also important to know is that MPD is not a greenfields project. It has been historically drilled over a long time, over almost 50 years, since the 60s, by a whole lot of different companies at different points in time and on different smaller land packages. I won't bore you with the details, but there are two important takeaways. Firstly, copper and gold has been drilled near surface over a large footprint. You see the black dots on the map, that's the historic drill holes, and they span an area of 10 square kilometers, so large footprint. And secondly, all of this historic drilling was shallow. Most of it only down to between 100 and 200 meters in depth. And that is where we took a different approach and where we saw the opportunity. We drilled deeper, down to 800 meters, and we were successful right off the bat. Here is our hole number 4 that we released last year in September, and that was, as I mentioned, a transformative event for the company. At the time, it generated a huge amount of excitement in the market. We then did a large financing of $12.7 million, and Teck came in as an investor, took 9.9% of our share capital and invested $8 million, which of course was a great vote of confidence to have a large player like Teck invest that early in our exploration progress. Keep in mind, we've so far only drilled 10 holes, so we're really only at the start. And here on the slide, you see what we drilled with hole number 4. In total, the intercept was over 500 meters, 535 meters of 0.76% copper equivalent. And just to put that into perspective, the neighboring mine, Copper Mountain, their reserve grade is 0.24% copper. So this intercept was roughly 3 times as much. And very importantly, also within this very long mineralized intercept, there was a significantly higher grade zone in the center of 282 meters of 1.16% copper equivalent. That was, of course, a fantastic start. And we have since released more results. We drilled in total 10 holes last year, 6,700 meters. And you see on my next slide a summary of some of those results. This is the same cross-section you saw before, and hole 4 is in the middle of this fan there. What you see here are a number of holes that we drilled from the same setup, and then one to the west, a vertical hole. The dark green and dark red zones are high-grade mineralization. And the long and the short is essentially that we intercepted this high-grade zone over long intercepts consistently with all these holes, and have now drilled high-grade mineralization over 300 meters in width approximately and down to 800 meters. That's, of course, only just over 10 holes into the drilling, still very early, but very encouraging, because these dimensions, 300 meters times 800 meters, that's already significant in size. And so, yeah, very encouraging. And of course, lots more work to do. What's important to understand is that we have only tested a tiny sliver of the large anomaly that overlies this the mineralization we have drilled. You see that on the slide here. The pink shaded area, that is a copper in soil anomaly that is related to the high-grade mineralization we drilled. And at the northern end of it, the black lines are the drill traces of the holes we drilled last year. And as you can see, we've only started at the northern end and drilled so far about 100 meters of this anomaly. And it's in total 1,000 meters long. So 90% still to be drilled. And that's what we will be doing this year. We have 30,000 meters drilling planned and are fully funded for it. And as our exploration VP said, we will be slicing the loaf of bread. So we will work our way systematically down this copper in soil anomaly and see how far and in which directions the high-grade mineralization extends that we have drilled in our initial couple of holes. So lots more drilling to come. Lots of news flow. And this is only at the gate zone where we made our discovery last year. We also have other targets on the property that we will be testing as well. And you see a bit of a bigger picture on this map. To the left, the sort of peanut-shaped area is the gate zone that I just talked about, with the large pink copper in soil anomaly, and then underlying it, the green-blue shaded area is a magnetic and resistivity low. So that's where we're drilling at the moment. That's where we started this year's drill program. And we then have another very similar analogous target at Dillard, which you see at the bottom of the slide in the center. It's very much the same signature. Geophysical magnetic resistivity low with a big copper in soil anomaly on top, and a number of shallow historic drill results with promising results. So Dillard, we actually meant to drill last year already, but we then had so much success at Gate that we never got around to Dillard. Dillard also this year is very high on our list, and we'll be drilling that too. And then we have other target areas such as Dillard East as well. So we are not short of targets. It'll be a very, very busy year for Kodiak with lots of drill results, lots of news flow to come. Last but not least, our capital structure. Couple of things to point out. We are a very tightly held company. On the left, you see our shares outstanding, just over 45 million, fully diluted, just over 50 million. We are fully funded with 14 million of cash in the treasury, fully funded for this year's work and beyond, which is, of course, a fantastic situation to be in. Our shareholders, largest shareholders is Tech Resources, and then management and board about just under 9%. And at the bottom, you see our share price. As I mentioned, last year's discovery generated a massive amount of excitement. Our share price spiked at over $3. It has since pulled back to the $1.50 area, and arguably a good buying opportunity. I would say the market is simply waiting for us to generate more results, and we will be back with more news in the near future with the drill results from our ongoing project, and then more news to come all the way through the year. So it's very exciting times. I can't wait for our drill results and for our drill program to progress, and I'm very confident we can make this a good year for our shareholders. Thank you.
Thank you, Claudia, and thank you, everyone. So right now we're getting to the question period of our webinar. The questions are starting to come in. I just thought I'd give it another minute or so just to allow people to ask their questions. But Stefan, are you there still? Can we hear you?
I'm here, yeah.
Oh, okay, great. Because I thought this first question, it pertains to you. And it might not be fair right off the top of your head, but the speaker projects a 3.5% annual increase in the future copper demand. What is the rate of annual increase in the copper consumption in the last 10 years?
Well, I'd have to look back, but I mean, the current projections, when you look at it, are anywhere from 2 to 4%, right? Obviously, the bearish being the 2% and the bullish being 4 to even 5%. And I think you can get towards that more bullish end of things. Like that one picture I showed you is a bit of a cartoon. You'll see a similar looking graph all over the internet, but the actual, whether it's 2% or 4%, depends on whose data set you're looking at. But I think there's an argument that as we move a little bit further out, the idea that it could be, closer to the 4% end of that, with the EV narrative coming on stream as it sort of ramps up over the next decade, like I kind of showed in some of those graphs. So I'm not sure if that exactly answers the question. I can look back and find out what the exact number is over history, but it has been growing fairly steadily at anywhere.
I think that's a fair answer, given that we're putting on the spot here. So the second question is directed to Western Copper and Gold. As I've understood it, WRN is in the beginning stages of permitting. Do you think this affects the company's ability to find a buyer/partner? And is the company at the moment actively looking for a buyer/partner?
Well, I'll work that in reverse, and I guess I think every junior mining company is always looking for a buyer/partner, and certainly a project of this magnitude, and from the feasibility study in 2013, the capital cost was $2.5 billion, and we'll see with the updated PEA what it comes in at, but it's in that order of magnitude. So I've been pretty public in saying that the best way I think for this project to go forward is with a partner or in the hands of a major. In terms of where we are in the process, I don't think that has any impact on those discussions. We have a number of discussions underway and have had in the past, and I think that what's exciting for me is that when copper hits $4 consistently, and back to what Steph was talking about with just not a lot of good projects out there, suddenly the majors become buyers of copper projects, and we now have those things in place. And so, certainly I think, at least from my experience, I'm seeing a lot more interest.
Thank you. And Tony, how might you answer that question without giving away trade secrets, or how are you seeing the market?
Yeah, I think it's interesting to hear Paul speak about having a partner, and we're very fortunate that we have South 32 as a partner in the project. And effectively, we believe South 32 has already done the passover that Teck is doing with respect to Kodiak, for example. They've come in, they've done their due diligence as part of a process. They made a staged investment of $30 million in exploration, and then they put their money on the table to earn a 50% in the district by putting $140 million. And then we also have the Nano partnership, which is really going to be key, and I think is a key for all of the companies represented here in terms of having strong relationships with the native communities and having that. So we feel like we're in a really good position. We're starting the permitting process this year. That sort of kicks us off into making an investment decision, which would come at the end of a permitting point of view. And our objective is to add value through the drill bit, like Claudia was talking about. And we didn't have a drill campaign last year. We're going to have one this year. We already know we have high grade. We just want to find more of it and extend mine life at Arctic and see what bornite really is and how it ties into Arctic. So that's what we're focused and excited about.
Right. And Claudia, Teck's a big partner with Kodiak. Why do you think they came in so early in the game, relatively speaking?
Well, they came in after just 4 holes at the gate zone. That's obviously very early, and it's fantastic to have them as a partner. They know the area intimately. Their big Highland Valley copper moly mine is just 50 kilometers to our north. And what I think they liked is simply the size potential. They are a big company. They wouldn't be interested in a small project. They looked at the footprint that we have at NPD, and they could see this to have the potential to be a big mine. That's what got them interested. And obviously the grades we drilled with our first couple of drill holes were very exciting. We were fortunate to hit a nice high-grade zone right away, which has since already shown quite some size. And so that's an exciting start. And I feel very fortunate to have gained Teck as a partner. They have been very supportive and are a great partner to have in the boat.
Great, thank you. This next question is to the panel, and maybe Tony, you could be the first to answer this one. Do we think North America can realistically compete with South America on copper?
Wow, I think so. I mean, North America, we're very fortunate. We've got great jurisdictions, whether you're in Alaska, Yukon, BC. There's a strong rule of law. There's high environmental standards, but that's the way it has to be. And then we're working very closely with the communities, and I think all of us are in the same position in terms of doing that. And I think the other major consideration is, as we talk about EV and electrification of a grid and infrastructure, is really important to have your own source of metals. So I think whether Canada or US, there's going to be a desire to have Canadian sourced or American sourced copper, cobalt, and these very strategic metals that are going to be necessary for electrification of a grid. So I think we can be absolutely extremely competitive. And, I feel we have a huge advantage in terms of being in the great state of Alaska or being in British Columbia or Yukon. I think we're very fortunate to be operating in these jurisdictions.
Paul, do you have anything to add to that? Or?
Well, Tony, I think Tony did a great job answering it. But just to reiterate a couple points, I mean, absolutely competitive. And, the thing that I would point out is that a lot of South America, particularly Chile and Peru, has seen a lot of exploration activity. I mean, there's been a lot of money poured into that area. Whereas, where are you seeing big discoveries here? Well, these three here. I mean, we're in Alaska, Yukon, underexplored areas, and even British Columbia, which is continuing to show promise with Kodiak. So, I mean, it's sort of, there's been a lot of exploration in South America previous, and now there's a bit of a shift in a lot of great discoveries coming out of North America.
Thank you. Actually, wanted to talk about ESG, which is environmental, sustainability, and governance. You had a slide on that, Paul. So maybe I'll start with Claudia on this. ESG, and Stefan alluded to this, that the matrix are really kind of pushing away from IRR and economies of scale and really emphasizing ESG moving forward. It's becoming an absolutely critical thing. So maybe discuss your philosophy about ESG and what are some of the things that you're doing to instill it.
Sure. Well, ESG is crucially important at any stage of an exploration or mining project. There are many mines or would-be mines in the past that never came into being because of local oppositions, because the operators just didn't do the ESG side well. And for me, ESG is just the most important of all. I would put that the highest priority. We work already at this early stage very closely with First Nations group before we even put a spade to the ground or disturb ground in any way. We would consult and get a heritage survey done. We're also looking into hiring First Nation into the project team as we are growing the project team. And we've started, even though we're only a couple of holes in, with environmental baseline work and to make sure we really cover the environmental side as well. So yeah, I think ESG is just crucially important. Stefan highlighted that as well. And as a company in today's time, not paying attention to ESG is just not right.
Yeah, it's interesting that we've got all three jurisdictions here with the Yukon and Alaska and BC. Maybe Tony, in Alaska, what is your philosophy? What are some of the programs that you have in place to, on the ESG side?
Yeah, I think we're very fortunate. My predecessor, Rick Van Nieuwenhuis, did a great job of working with the Northwest Arctic Bureau and NANA and the communities. And I mentioned that NANA is our partner in the district. So they actually are either going to be an economic partner in any of the mines that are developed in terms of direct ownership interest, if that's the path they take, or they can have a net profit interest of 15%. So it's a great situation for them in the sense that they're going to economically benefit from the development of the mines directly from the development of the mines. And then the other benefit will be obviously through employment and procurement opportunities. But the key for us is really going to be working very much with the Native communities, the shareholders of NANA, and making sure that we're respectful of their subsistent hunting and fishing, particularly as we look at the development of a road in the district. That's going to be a key, and a lot of work has been done, a lot of outreach has been done, and we, like the other companies, obviously have a lot of Aboriginal or Native employees, and we'll be looking to put training programs in place once we move these projects forward. So those are going to be the key steps. It's very much the interface with NANA, Northwest Arctic Bureau, and the state in terms of advancing the project. And then lastly, in terms of environmental, we're planning to start the permitting process this year. A big part of our focus is really on water management and tailings management, and we want to make sure we get those areas down pat before we start the permitting process. So we're effectively revisiting the work that was done in the Trilogy feasibility study in terms of determining the path forward in both of those areas, which are going to be key from a permitting point of view.
Great. Thank you. And Paul, anything you'd like to add, in the Yukon that you haven't already touched on?
Yeah, I mean, the only thing that I would say is that, particularly in Western Canada and northern communities such as Alaska and the Yukon, I mean, working with Indigenous groups and the First Nations is basically built into what you do. I mean, you just don't advance your projects unless you have those good relationships. And as an illustrative example, we, for our tailings facility, I mean, we actually went through a process that took us 18 months where we worked with the impacted First Nations and the regulator, looking at all the options. We started off with 385 options on tailings and mine waste and ended up with one. And that took a year and a half, which was, some valuable time. But if you don't take those steps, if you don't take the time that it takes to make sure that everyone understands your project, it's not going to go forward. You're going to get opposition. So I think, that's what we do. That's what all the companies here that you're talking to do.
Excellent. Nice, well-rounded answers. Thanks. So finally, I guess, as we're getting near the end of this, I guess people want to know, why would they want to look at your stock right now? What are some of the catalysts moving forward? So I'll start with you, Claudia. What are some of the catalysts that investors can look at with Kodiak Copper?
Well, the answer for Kodiak is easy. It's drill results. We are drilling as we speak. First results will come in later in spring, early summer. And as we are ramping up our drill program and adding drill rigs, the news will accelerate through the rest of the year. So lots more drill results, and keep your fingers crossed for more high-grade results and long intercepts.
And Paul, anything in the near future that people should be looking out for?
Yeah, I mean, we're all excited internally because, this PA, which is, Q2, which, we're now in, so pretty imminent. And, I talked to our VP of engineering last week, and things are progressing, on schedule. And, this will be, the first economic study since 2013. It'll have a new resource. It'll have the new tailings facility that I just referred to that was developed with the First Nations, and a bunch of other things. So that'll be excited, and then an full updated feasibility study by the end of the year.
Thank you. And Tony, for you?
Yeah, it was on my slide, but I think the biggest thing that we're focused on is drilling this year. We didn't have a field season last year. We're going to have 14,600 meters, $27 million program. It's really about finding more high grade, connecting bornite to Arctic. We brought in a consultant, Dr. David Broughton. David and I worked together at Ivanhoe. He was a co-discoverer of Kamoa-Kakula, and this is right up his sweet spot in terms of Kapushi type deposit at bornite. So we want to see how that connects. I think there's lots of opportunity there. So that's a story. And, like others have pointed out, we think from a share price point of view, the developers really haven't seen an uptick in their share prices, even though we've seen some upward movement. A lot of the focus has been on operating development companies. So we think this is still a very positive time to come into the story.
Great. Well, thank you very much. I think that's probably, we still have some more questions, but we will answer these directly for people because not all these questions are relevant to everyone in the audience. So with any questions that we have that haven't been answered now, we will respond to them via email. And of course, we have everybody's contact information on this slide, or you can contact SIX after the webinar. But thank you all, and Stefan, thank you for joining us when you could, and appreciate your insights in the macro market. So with that,
Great, thanks for having me.
Yes, thanks. So with that, we will sign off, and thank you everyone for listening.